Alrighty, welcome back to another episode of Hashing It Out with Javi. This is episode 21. I haven't been on the mic in a while. It's been almost a month, so I'm glad to be back. And today I got my good friend, Johnnie Mercado. What's going on, bro?
What's up, bro? I'm doing good, man. Glad to be back. I know that we've been talking about this for a minute now. And something always came up, but I'm glad to be back on the mic with you, bro.
Yeah, man, for sure. Excited to have it. Actually, this podcast is one I've been wanting to do for a long time, to be honest.
Yeah.
I think it's very informational and educational for a lot of people. And so we're today, so people, who don't know you, you're a loan officer.
Yeah.
And so you deal with the loan end of home purchases, refinances, that kind of stuff.
Of course. Yeah. This is what I do. I've been doing it for a while now. Started off as an assistant, and then worked my way into, being my own loan officer and doing my own thing. And I was working for a big bank for a minute. I think I talked about that in the last podcast that we had. Yeah, I was working with a big bank for a while, and then decided to do it on my own with a what we call in the industry a mini correspondent lender, which means that we're a direct lender, but we're also a broker. So
gotcha.
Yeah,
good stuff, man. Well, so today we're going to be talking about all that stuff that I mentioned, right? Refinancing, home purchases, the loan, sort of the financial part of it, right? So there's a difference. So when you buy a home, there's a realtor involved, and they're kind of in charge of the sale of the home, right?
Yep.
And then the loan officer is in charge of the financial piece of the loan, how you secure the loan, get approved for the loan, that kind of thing. So, again, I'm excited to talk about this. So let's start with some basics. If I was gonna purchase a home, right?
Yeah.
What's one of the first things I would have to do on the financial piece to buy a home?
First thing I can recommend anybody that's interested in buying a home, bro, is getting your finances in place and understanding boundaries. One of the main things that I talk about whenever I sit with any family or with just anyone in general, when they want to buy a house, is the main thing is understanding what your boundary is as far as how much money do you want to spend on a monthly basis on a mortgage payment. And the reason why I say this is because a lot of times, especially in times like today, you're going to qualify for a little bit more than what you want to pay.
Right.
And it's all because your qualification is based off of what you make gross, not what you make net. You know what I mean? It's based off of what you make before taxes, not after taxes. So a lot of times I tell people, look, it's important for you to have boundaries and understand that if you're working just to make your mortgage payment, you're not really living life. Like, if you're working just to make, like, let's say, for example, I'm making $5,000 a month, right? Or $3,000 a month, whatever it is. But 50% of that is going to my mortgage. Like, and it's before taxes, right? That's kind of tough. I mean, if you ask me, that's a very difficult position to be in, because then how much money do I have to pay for, childcare, or how much money do I have to pay for, my kids' sports, or I also have to think about bills and all these other things. Like, I want to be able to pay my mortgage, but also, be able to do life. So a lot of times I tell people, like, set your boundary, start talking about these things, and have healthy conversations with your spouse or with your partner or with whoever it is that you want to, do this with. Even if it's yourself, have these conversations with yourself even. Okay, what's a payment that I want to, what this is how much I qualify for, but what is my limit?
Right.
And also understanding, like, being fair with yourself. A lot of times I tell people, bro, like, your first house is not your forever home. Like, don't think you're going to get into a Taj Mahal, like, as soon as you buy your first house. Your first house is probably not going to be the most beautiful house in the world, but it's going to help you get your foot in the door with real estate.
Right. Being realistic with yourself is really important. And you're right. So, part of the initial process is like the pre-approval process, right?
Correct.
So, pre-approval, like, you go through and you work with somebody like you, who's a loan officer, and say, hey, here's all my financial information with regards to what I make, what I do, for money, how I get money. Mm-hmm. And then the pre-approval process tells you kind of your boundary with which the amount you would have to purchase a home, right? So it could say, like, if you make $60,000 a year, as a couple, maybe you make $100,000 a year, you can potentially afford a $500,000 property, $600,000 property. We're going to pre-approve you for that, right? Right. So let's talk a little bit about kind of how that process works, because I think that's the first kind of step, right? Before if I'm going to buy a home, I think the first step is really to go through that process, right? And to know what I can afford. Right. Not actually, let me say that. It's not really afford. It's what they'll approve you for. But again, you got to be realistic about what you can afford, right? So talk about the pre-approval process.
So pre-approval process, first and foremost, I want to say, if it's not on paper, you cannot claim it. Because I know there's a lot of people out there with side hustles. Like, I appreciate side hustles, and I always tell everybody you should have a side hustle. But if you're not claiming on your taxes, like, I'm sorry, but we can't. We can't claim it on here.
It's got to be in the bank.
Yeah, it's got to be in the bank. Like, you gotta. Uncle Sam has to know about your income. So the pre-approval process, man, it's probably my favorite initial conversation to have with anyone. And like you said, it's where we sit down, man. What I do with my people is I tell them, like, look, it's not just about telling me how much you make, tell me all this and that. Like, it's just about being honest,
right?
Like, being real. I've had people that come to me and tell me, like, oh, I have a 760 credit score. I have a, perfect credit score, and I make this much and this much and all this and no debt. And boom, I run the credit. Well, you're in the 500s. Like, what's going on?
Yeah.
Why are you lying to me? Well, it's like,
be honest during that process.
Exactly.
I think what I learned when I bought my first home is that like everything comes up.
Oh, bro.
And the pre-approval is just one piece. When you get into escrow, it's a whole other thing. So we'll talk about that eventually. But I mean, the government will scrutinize just about every little thing.
Oh, for sure.
And transaction in your bank account.
100%. And that's why I always say, like, whatever relationship you have with your loan officer, like it has to be a tight one. Like, you have to be very, very close when it comes to this, this transaction. Like, you have to be really close with your loan officer. Tell them exactly everything that's going on with your financial picture, because if you don't, I mean, we're going to find out regardless. Like, this is what I tell people. Like, look, one thing is what you tell me, and then another thing is what I find out.
Right.
Like, you decide, what do you want me to do? You want to tell me everything up front, or you want me to find out afterwards? Because if you tell me up front, at least we know what to expect. But if you tell me something, if you tell me one thing, and then I see another thing, it's like, come on. Like, what are we doing here? Yeah. We're wasting our time. Realistically speaking, we're wasting our time. The more honest you are when you sit down for that initial conversation with your loan officer, the better things are going to go, because you let me know, and then you also let me, start planning for you. Because at the end of the day, this whole buying a house, dude, it's whoever says it's easy is fucking stupid. Like, I'm sorry for the language here, but whoever says it's easy to buy a house is fucking stupid.
You can cuss all you want, man. It's a process. It's frustrating.
It's a frustrating fucking process, bro. Yes. And if you're not on the same page with your team, bro, oh my goodness, it can become something like almost it can become something like that gets annoying. Right. You know what I mean?
Yeah.
And it's tough sometimes. It's tough. So this process has to be something where you're in the game, your head's in the game, you as the buyer, your spouse or whoever's on this loan with you, your loan officer's on it with you, and then also your real estate agent. Like, everybody has to be on the same page. And the more everybody knows about, everything that's going on in this process, the better. It just makes things so much clearer. Yep. Like, if I know everything up front, it's going to make things so much easier, because I can start planning for you. It's just about setting a plan in place in order for you to reach that destination.
Yeah. And it's a very personal process. People don't realize, like you said, you better have a good connection with your loan officer, even your realtor, because I'm telling you, man, they dig into everything financial. I mean, your bank statements basically are given to them, and they know everything, right?
Oh, for sure.
I remember the first time I bought the first house I bought. A friend of mine goes, who I was working with at the time, she goes, "Hey, man, you make great money, but you spend a lot of money on dumb shit." I'm like, "Hey, why are you looking at me?" She goes, "That's what we do. We go through, we scrutinize everything,
Oh, for sure.
I'm like, man. So, and so let's talk about, so the pre-approval process is kind of step number one, right? So we're going to go through kind of the motions and the steps it takes to buy a house, and then talk about maybe the importance of purchasing a home, maybe why you should or shouldn't purchase a home, those kinds of things, right? But so the pre-approval process is first. But I think a lot of people, once you get the pre-approval process, right, after that, what would be sort of the next steps? Would it be working with the realtor to find the home you want?
So the next step that I would recommend is always find a real estate agent that you can get along with and that you vibe with. And then I feel like that's the biggest mistake that buyers make. They go to the first real estate agent that they know, the first real estate agent that's recommended to them. It's like, no, you want to be able to vibe with your people. Right. You feel me? Like, you realize that you're making the biggest purchase of your life. I mean, to me, this is the biggest investment you're ever going to make, besides the person that you decide you're going to spend your life with.
Right.
Other than choosing your spouse, like, this is the biggest thing biggest decision you have to make.
It's a 30-year commitment.
It's a 30-year commitment, bro. This is where you're going to
30, 10, whatever.
Let's say 30.
Most people do 30-year loans, right?
I'm going to do a 30-year loan, bro. I'm never going to do a 15 or 20 year. Like, anyway.
Yeah.
this is a big commitment. So you have to make sure that whoever's involved in this is actually in it for the right reason and is actually going to give you the service that you deserve. So I always tell people the second thing you want to do after you get pre-approved, main thing is get that. Know what your budget is. Know what you qualify for. Because it would really suck if I took you, I'm talking about here, Ventura County, if you guys know Spanish Hills and Camarillo, you know what I'm talking about. Yeah. If I take you to shop at Spanish Hills and then at the end I tell you you don't qualify for that, you're going to be fucking pissed at me. But why are you taking me here then?
It's a multi-million-dollar property.
Yeah, right? why are you taking me here to buy my first house if you know that I don't qualify for it? Right. What the fuck? And then you're going to get upset. So get pre-qualified after you do that. Go interview. I always say interview about 3 real estate agents. Interview 3 real estate agents that you find on social media that have been recommended to you, whatever, and make sure that you vibe with them. Because there's a lot of real estate agents out there that are focused more on the money than they are focused on really getting to know you and understanding realistically what you want and what you need. Find a real estate agent that's really going to do the best job for you. At the end of the day, whoever's buying a house isn't necessarily paying a real estate agent. It's the seller that pays.
Yeah, but the real estate agents, they make a good coin too.
Oh, they're going to make a good fucking chunk of change on you.
The average is about what, 6%? I think we're talking about earlier.
So the average in the area, what I've seen in the last few years, a real estate agent will charge 6% to list a house, and then they'll share that whatever, they'll give 2.5% or 3% to whoever brings a buyer, and that's a buyer's agent. And that's what I'm saying. Like after you get pre-approved, you speak to a buyer's agent.
Gotcha.
Speak to somebody that's going to show you homes, somebody that's going to submit offers for you, and it's going to walk you through the buying process.
Gotcha.
So that's why I'm saying, like, they're going to make their money. They're going to make their coin. You want to make sure that you find someone that's going to do the best for you, that's going to represent you in the way that you want to be represented, and that's also going to be there for you when you have questions, when you have concerns, or when if you want to see 20 houses, well, guess what? They're willing to give you the time of day to show you 20 houses.
Absolutely.
So that's why that's one of the main things that I always say. Find a real estate agent that you vibe with. Find somebody that's going to take the time to understand what you want and put you in front of places that fit your needs. Because there's also going to be real estate agents that are going to shove their listings down your throat. Right. It's like, dude, we don't need that. Like, I already told you, I want a single family home. I want a house that's a single floor. I don't want a 2-story house. Stop showing me fucking 2-story houses. Why are you doing that? So that's why I mean, like, find a real estate agent that's going to do what's best for you, not for them.
And also shop real estate agents for pricing too, I would think, you know what I mean? Because,
for sure.
I mean, if they're putting 6 points or what we call 6% on a loan, right? So, you buy a $400,000 home, that's $24,000 they're making, right? So, and people don't realize that when we talk about points, it's basically percentage points, right? So, if you find someone who's going to do it for 4 points versus 6, not always, maybe it's not the same level of customer service, but you might save some coin there too. Mm-hmm. You know what I mean?
Yeah. And I think that all goes like, I mean, it's kind of like when we go, I hate to compare, but it's kind of like saying like, you go to Walmart and you go to Target. Right. At Walmart, you're going to find
Target
a little
forever,
bit.
bro.
Bro, I'm a Target guy, man. I go to Target, bro. Hey, but you know what? Sometimes I go to Wally World, bro. Sometimes I head up and, I head up to Walmart, bro. But it's just, you have to find that level of service that you're looking for. If you understand that you're going to need a little more attention, you're going to need a little more love, it's probably going to cost you a little more money.
Right.
You know what I mean? Yeah. If you want that AAA service, if you want that, like, grade A, you want that top of the line service, you want that Louis Vuitton, Gucci, that Fendi experience, you're probably going to pay top dollar for it. But if you're okay with getting just enough, you're probably going to pay a little less. So that's something that, you also have to take into consideration. Those top performing and top producing agents are probably going to charge you a little bit more. Right. And those, maybe the agents that are just starting off, or maybe the agents that only do it, part-time, they might charge you a little bit less, and it's okay. It just depends what kind of service you're looking for.
Right. Yeah, absolutely. So there's a lot of things to consider when buying a home, right? So we've already gone through kind of the pre-approval process, looking into a real estate agent. I think there's one thing that excuse me, that I've always kind of wanted people to understand. So I've owned, I have a rental property, and I have my property now I live in, right? And the rental property, when I bought that initially, that was my home. It was going to be the home for me and my kid for a long time, right?
Right.
And so people often ask me, like, I don't know if I want just a condo. I don't know if I want just a single family home that's, single story, 2 bedrooms, 1 bathroom. And I'm like, dude, just get into the game. You know what I mean? So when you're looking for a property, it's not always going to be your forever home.
Oh, for sure.
For me, every house I bought, including the one I'm in now, which I love, is always a stepping stone to the next home.
Of course.
You know what I mean? And so I think people, they get stuck in I'm going to buy my forever home. Just get into something. Stop paying rent. You know what I mean? You're paying somebody else's mortgage when you should be paying your own.
Oh, for sure. You know, it's like I told you earlier here when we were chatting. I use my dad as an example all the time, and I wish my pops would have got his shit together a little sooner. I remember my parents got in the in the position to buy a house when we initially started looking. I mean, I'm talking about, I think I was maybe 10 or 11 years old when they first started looking. I remember they qualified for a condo. They didn't qualify for a single family home, for a house. They qualified for a condo. And my dad said a very, very stupid thing. And he said, I'm never going to move into a condo. Now, I think that's the stupidest thing he ever fucking did to himself. Not to me, but to himself. And the reason why I say that is because we have to understand, Javi, like, look, bro, your first house is never, ever going to be your forever home. It's also like, the example I gave you. For those of you that live here in the area, if your parents live in Spanish Hills, okay, and I'm talking about a very, very, nice area, huge. They're not houses out there.
Bougie.
We're talking about estates.
They're estates and mansions, yeah.
We're talking about 4,500 square feet homes, like huge houses to me, right? If your parents are living there, right, and you go out and you try to buy your first home, you're probably not going to buy a house in that same fucking area.
Right.
You're probably going to buy a condo or maybe a house in maybe not the best neighborhood, but it's a stepping stone. You have to remember that when you buy your first house, bro, it's just a stepping stone.
Right.
It's you're not going to be there forever. It's just to get your foot in the game.
Right.
The more you wait, the longer we wait, the more house prices are going to go up. Yep. Have you guys seen house prices go back down to early 2000s? Fuck no. Are we going to see that happen again? Probably not.
Homes here in Oxnard, just so you know, when my family first moved out here, so I'm originally from Santa Barbara, born and raised, right?
Yeah.
I think my parents bought their first home out here for like $160,000.
Yeah. That
same home probably would sell today for about $700-800.
Yeah. Are you going to see that price go back down to 160?
Never, ever,
Fuck
ever,
no.
ever.
Like, so, you're never going to see that, bro. Inflation. Have you ever seen like reverse inflation?
Yeah.
Fuck no.
Never.
I told you the big stick story, right?
Yeah.
Like, for example, I'll share with you guys. When I was a kid, I used to buy, and please, I know this isn't going to age well, me saying this, but because of the fucking name. Anyway, you guys remember big sticks, right? At the fucking stick, I said stick, big stick, okay? I had to make that clear. At the ice cream truck, okay? A big stick back in the day would cost me 25 cents. This is when I was a kid. I was like 7 or 8 years old.
Yep.
Okay? Try to go buy that shit at the same fucking price now. You're not going to find it anywhere, bro. You're going to pay $1.25, maybe $1.50 for the same freaking thing. You're never going to see it go back to the same price. And that's the thing. Like, there's this thing called inflation. Back in the day, I remember when I first started working, I mean, I think I was making like $8 an hour.
Right.
Okay? To most people, they're like, oh shit, you started working at $8 an hour. But now you try to get a job at McDonald's where I first started working, $15 an hour, $12 an hour. I don't know how much you're paying, but they're not going to make that. That's peanuts.
Right.
You feel me? So that's what I'm saying. Like, prices, you have to understand, like, it's never going to be the same that it used to be. You ask me when the best time to buy, I'm always going to say, fucking 10 years ago, 5 years ago. I'm always going to say that.
Right. Yeah. So that's the thing is inflation. So people, we're kind of bouncing around here a little bit, but it's important information that people don't really understand is that, like,
right.
Home, if you put home cost on like a graph, like a lined graph, from 1920 until now, sure, there's been some dips, but it's always up and to the right. What that means is that the home value is always consistently going up.
Yeah.
Over time. It's not a short game unless you have money to drop into multiple homes and flipping them and that kind of thing. It's not a short game, and your first home should be a stepping stone to the next, which is a long game investment. And really, when it comes to like the middle class, like home investment is probably like one of the biggest investments we have.
Oh, for sure.
When it comes to like having any kind of tax breaks, what I mean? Like, you get to write off like all the interest. And people don't, here's one thing. If you do buy a home, don't look at your statements.
Oh, yeah.
Because the amount of money that goes to the bank versus into the actual principal to pay off the full loan is alarming. And the first 5 years,
That's the biggest.
Yeah, because the banks want their money. They want it now. You know what I mean? So they're like, hey, I lend you $500,000. I want you to pay the interest up front.
Oh, for sure.
And so, there's a lot of money. But the thing about that is that you get to write all that off on your taxes.
Oh, facts. Yep.
And so your tax returns are huge when you buy a home. So, like, my mom told me something, my parents. Yeah, my mom told me when I bought my first house, she said, look, the first year is the toughest when you buy your first home because you're just learning to adjust. And now you have this big mortgage, you have this whatever. But when you get past that year, you get a bunch of tax breaks and stuff. Your tax return is going to be a lot of money, and there's all kinds of stuff involved in that. And so there's a lot of adjusting, when you buy your first home. You know what I mean? So, so we've gone through sort of going, getting pre-approved, talking to a realtor, finding the home you want.
Yeah.
Making sure you find the right realtor, finding the right realtor for the cost, but also the customer service you get from them.
Correct.
The level of customer service. We've talked about, your first home is not your forever home. So don't be too picky early on. If it's your first home.
Yeah. Be easy on yourself.
Be easy on yourself. Yeah. And be realistic.
Yeah.
Be realistic about what you can afford. Because here's the deal. You may be able to afford a $2,000 a month Land Rover if you want, but it doesn't mean that you should. You
exactly.
I mean? So that's the same principle when it comes to homes. You know what I mean? When you're buying stuff, just because you get approved for it doesn't mean you should buy it. Buy it within your means. I
agree, bro. And I do have to throw out there, you cannot come into this business. You cannot come into real estate and wanting to buy a house with, you can't come in here with a 40-ounce budget expecting champagne. You cannot. Look, again, I cannot stress enough. Like, you have to be fair with yourself. You have to understand your current financial picture, and you have to understand that it takes you don't start running immediately. You first crawl, and then you start walking, and then maybe you get a little faster, and then you start running.
And then you shit your diaper. Time.
And then you shit your diaper. Fuck yeah. Yeah, but you have to be realistic with yourself when it comes to this stuff. Like, for sure. You're not gonna hit the ground running. Like, you got it. It's step by step. It's a long-term game.
Right. So we've gone through that process. Now let's talk about let's say you find your home, right? You've now been pre-approved. You found your home. You found the right realtor. Now comes the process of, a down payment, right? So this is an important piece that I hope everyone really listens to because, I found out very quickly that, during the loan process, working with somebody like you, they go, hey, give me 60 days of bank statements. Right. And they're like, hey, on day 58 in the past, you put in $10,000 in your bank account. Where did that come from? Yeah. Right? Oh, shit. So you know what I'm talking about, right? So
that's a loan officer's nightmare, bro.
Yes. So when it comes to a down payment, there's some things to keep in mind. So if you're going to buy a home, make sure you have the money that you're going to use for a down payment in your bank account for at least, I would say, I mean, they say 60 days, but they go back farther when they find stuff, right? So they found that they go back farther and go, oh, we'll dig deeper into this, right?
Yeah. So here's the thing. Like, my biggest recommendation, at least have the money in your bank. Have the money in your bank account.
In the mic cord, they're popping in a little bit deeper, I think, maybe. Okay, yeah, you're good, I think. Hey, it keeps popping out for whatever reason, but I think we're good.
We're good?
Yeah,
okay.
Sorry about
All right. So when it comes to that, bro, it's oh my goodness, that's like a loan officer's nightmare. Whenever you deposit cash, bro, like
I did that, by the way,
bro. I hope you never do that again, bro. Because one thing that I tell everyone is like, look, if you have money in the bank, or you have money for your down payment, I hope that money is in there before you even talk to me. Right. I don't want to look. I don't want to wonder. I don't want to ask. Your money should be in your bank account before you talk to me. If you have $50,000 to put for your down payment, if you have $20,000, if you have $10,000, I don't care what the amount is. The money should be in your bank account before you even talk to me. Right. Because mattress money, fuck that. Like, the government doesn't. Uncle Sam wants his piece of everything, bro.
And that's the part of this process is to weed out where that money's coming from.
Oh, for sure.
It's the biggest part of the process.
Right? And they want to make sure that there's no money laundering going on. Let's say, for example, I were to go to to a loan officer and say, hey, look, I want to buy a house. I have this much. Okay, they say, yes, you're pre-approved, but because I said I had $100,000 in my bank account, and then I'm trying to launder money, and I put the money in there, boom, Uncle Sam's gonna notice that right away. Right. You feel me?
Yeah, yeah.
So that's why those loans, it's very difficult to do. I always tell people, have your money in the bank at least 3 months. If it's in there for 3 months, minimum. If it's longer than that, good.
Yep.
But minimum 3 months, so that if we get asked for any proof of where the money's been, I can show you, look, the money's been in there for a while. And that's what I tell people all the time. Like, have your money in the account. Plus, let's say, for example, you're renting a house, right? Or you're renting an apartment and it catches on fire and your money burns. Well, what happens? Well, you're fucked.
You're fucked.
You're shit out of luck, bro.
Yeah.
You lost your money. But let's say, for example, the bank burns down. There's this beautiful thing called FDIC. This protects you up to $250,000 in the bank. So let's say you had $100,000 in the bank. Right. Well, guess what? This insurance protects your money up to at least up to a maximum of $250,000 per social security number. Right. So if your money's in the bank, your money's fucking taken care of. Your money's protected. So that's another thing I tell people, like, just put your money in the bank. Right. You know, you feel me? Like, you got to throw your money in the bank. That's you can't. So they put it under the mattress, bro. Leave that to your parents. Yeah. That's stuff of the past. Like, you got to put your money in the bank.
And there are some workarounds, all right. So like somebody could potentially, let's say your parents, right? Let's say you're gonna buy a house. Like, I need $30,000 to put down on this, $300,000 home, whatever. And your parents you're like, oh, but I only have 15. Your parents like, okay, I'll donate 15 to you, or I'll give you 15.
Right.
Your parents can gift you that money, but you have to deal with letters and stuff like that. There's a process if they do that. For instance, if I didn't have $30,000 in my bank account, I had 15, and it's I'm 60 days in the past. My parents give me 15 grand, and I put it in my bank account. I have to be able to justify that or describe why that came. It's like a gift letter or something like that.
Yeah.
Right.
Yeah. So there's a gift letter that every lender has. I think every lender has a different, format of how we do it. But for example, for us, we have a gift letter. We send it out to you and we let you know, okay, this is where you have to write the names. This is where you put. It's basically a contract saying, from your parents saying, like, look, I'm gifting the money for, to this person or to my son or daughter. I'm gifting them this money so that, for the purchase of their home. Right. And I'm not asking for them to pay it back. So that's what it is. It's a gift letter. Gotcha. As long as all parties associated with this transaction sign, we're solid. We're good. And that's what it is. And that definitely is a way around. So let's say, for example, you don't have enough to buy a house, but your parents want to help you out. Yeah, they can definitely help you out. That's possible.
Yeah, exactly. So I think it's important for people to know, because when you tell them, oh, you have to have X number of dollars in the bank for 90 days, like, they freak out, right?
Yeah.
So it's good to know that there are some kind of workarounds.
For sure.
Let's talk about percentages of down payments.
Yeah.
So the percentage of a loan that you have to put down. So there's different types of loans, right? There's a conventional loan, your straight standard loan, where you would have to have at least 20%, I think.
No, actually, there's programs now for for conventional loan. There's programs where you can come in as little as 3% if you're a first time home buyer.
Conventional?
Correct. Yeah.
So it's not FHA anymore.
Nope.
Just conventional.
Nope. Yeah.
So see, this is why it's important to stay on top of the laws.
Yep.
And is there a certain kind of tax bracket you have to be in to be able to do that?
Well,
really?
So there's two options. There's Fannie Mae and Freddie Mac, which are from the secondary mortgage market. They buy these loans, and they're the ones that offer, I guess you can say, the guidelines to these loans. So let's say, for example, there's specific income limits, and these income limits all depend on what area you live in and where you're at.
Right.
I won't get too much into detail because it is very different for vast areas. For example, LA County is very different from Ventura County, very different from Santa Barbara County. So it's just so different. Just reach out if you guys ever have questions about that. But you get the opportunity. If you haven't been on title, if anyone and everyone that's on the loan, that's going to go on loan, if they have not been on title for at least 3 years, minimum of 3 years, if they have not been on title for any other house, technically they're considered first-time home buyers. So you would qualify for what's called the Home Ready or Home Possible loan, which is Fannie Mae or Freddie Mac's first-time home buyer program. This allows you to come in with only 3% down.
Wow.
Yeah. As long as you meet the income limits and you also meet the criteria for, being a first-time home buyer, you would definitely be able to, own a home or buy a home with only 3% down.
Interesting. So that used to only be allowed with FHA loans.
Correct. And FHA was 3.5%.
Yes, it's 3.5%, and those are federal backed loans, right?
Correct.
So it's Freddie Mae and Freddie Mae and Fannie Mac.
Fannie Mae and Freddie Mac are government agencies, right? You said it backwards, but it's cool. The Fannie Mae and Freddie Mac are part of the secondary mortgage market, so it has nothing to do with the consumers. Gotcha. It's more the loan officers or the brokerages or the lending companies who we sell our loans to.
Gotcha.
As long as they meet the guidelines and they're able to be sold back to the government, and we're able to get more money back into investing back into the market. So
dang. So we'll get into PMI, but I'm curious now. I'm learning stuff. So and I try to stay on top of the game. So this is really good information for me myself. So one of the things I hear from people, which always drives me crazy, is like, I can't afford to get into a home, and I'm like, oh man, stop that, because on a 3%, for instance, right?
Yeah.
New home buyer, right? 3%. Let's say $500,000 home, right? Which is a nice home these days, right? You can get a decent home for $500,000 around here. Mm-hmm. At 3%, you're looking at only what, $15,000?
About $15,000, yeah.
And so people are like, I can't afford it. I'm like, dude,
yes, you can.
Stop using Starbucks, or stop having Starbucks every day for a year.
Your car don't need new rims.
Your car don't need new rims. Yeah. Take that stimmy money that sleepy Joe Biden gave you. You know what I mean? Put that down on a home. You know what I mean? So like, you don't need as much as you think you need now.
Yeah.
It does help to put more money down.
For sure.
If you want to have a home and have a mortgage that's not as high, right? So.
For sure.
But so one thing people don't realize is like, you don't need that much money to get into a home.
Yeah.
15 grand sounds like a lot, but most people over a period of years can come up with 15 grand.
For sure, bro.
Yeah. And I find if you really want it, you can figure it out.
That's the main thing, man. One of the other main points that I like to touch whenever I'm helping anybody buy a house or refinance or whatever, I tell people from the get, if you don't want this more than me, I can't make this happen for you. Right. You have to want this more than anybody else that's involved. You're the buyer or you're the homeowner. If you want to refinance or if you want to buy, you have to want this more than us, because this is going to require a lot of paperwork. It's going to require a lot of signatures, and it's going to require a lot of attention from you. Right. And the thing is that if you're not willing to put in the work, or you're not willing to, for example, for a home buyer, if you're not willing to save, if you're not willing to budget, then that just means that you're not truly committed to, becoming that homeowner, and you're not really truly committed to it. So if you're going to half-ass this, I'm sorry, but I'm not going to fucking spend my time on this. Like, I'm not. You feel me?
Right.
Like if you're serious about this and you're committed to it, then okay, let's do it together. I'll make it happen for you. But the thing is that you have to want it more than me.
Yep. So, we're talking about loans where you put 3% down. Now, I don't know if it's a downside. I think it's awesome that you can get into a home for so cheap. Mm-hmm. But there is a thing called PMI or which is mortgage insurance, right?
Right. So there's two types: is PMI and MIP.
MIP.
Yeah.
Right. And if you don't want to pay those, so for example, like on a loan, I think my rental property, when I first bought it a few years back, like 9 years ago, I think the actual mortgage was like $1,800, but I had to pay PMI on it because I didn't put more than 20% down.
Right.
So if you don't put 20% down of the value of the home, so for instance, if I bought a $200,000 home, I would have to put $40,000 down not to have to pay PMI insurance or MIP on it, right?
Correct.
So mortgage insurance. And the reason why mortgage insurance is around is because after the 2007, 8-ish real estate market crash, a lot of the banks were left with a bunch of toxic loans, right? So they put a bunch of loans out there. And what they're trying to do basically is secure and hedge a bet against if the loan defaults, meaning you stop paying your loan and they take the house from you, that they don't lose all their money. Correct. So they're charging you basically an insurance so that they don't have to deal with that.
Yeah, and that's essentially what it is. If you don't put that's essentially what it is. If you don't put down the 20%, it's kind of like saying like you have to have skin in the game, right? And the banks are saying like, it's basically me saying like, look, I trust you. I understand that you're going to pay, but just in case you don't, and you fuck up and you don't pay and you lose your job, whatever happens, I want to make sure that I get my investment back. Right. So what do? They put this kind of like think of it kind of like a life insurance on your mortgage. And it's exactly what it is. Like, let's say, for example, you default on your mortgage and you go to a foreclosure or a short sale. The bank's not going to say, oh, well, too bad, so sad for us. No, the bank's going to say, call the mortgage company, tell them to pay the fuck up.
Right.
The mortgage company is going to pay me so that I get what my investment was.
Right.
And that's what it is. Then they make sure that they pass that note to you as the buyer.
Yep.
And they say, you know what? I'm going to lend you this money, but it's going to cost you this much.
Yep.
You got to pay to play. And that's the thing. Like, yes, it sucks, Javi, but at the same time, it's like, we also have to understand that No, this is a good thing. It's good to pay mortgage insurance. Why? Because the banks are allowing us and giving us the opportunity to borrow money to get in position to become homeowners. Yeah. Because if the bank said, no, fuck you, we're not going to do it, they'd say, well, you got to put 20% down.
I don't know if I agree with that 100%.
Brother, but think about it. How many more families are able to buy thanks to mortgage insurance? Yes. How many more families have 3%? Like, I'll tell you this.
Well, today, though. But the reason why it started is because banks were giving out toxic loans.
Oh, correct.
So they're securing their funds. I mean, it's not really for... I guess what I'm saying is that it's not really for the buyer. It's to secure the bank's interest.
Oh, yeah. I agree with you.
So in other words, they're always going to get their money back in a sense, right? Now, you're absolutely right. It does allow a lot of people to get into a loan today that they couldn't get into yesterday or, a decade ago or whatever it may be, right? But that housing market crash, if you guys are not familiar with that, in 2005-ish to 2008-ish, the banks were basically approving anybody for a loan.
Yeah. And I have mixed emotions for that, bro. Really? I have very mixed emotions for that.
There'd be a dude who could be like a gardener who made maybe $10,000 a year, gardening on the side, who got approved for like $1 million home. The banks were issuing toxic loans.
Yeah.
And they made a ton of cash. So because of that, what happened is all those people that couldn't afford those homes ended up defaulting on their loans, and the banks lost a bunch of money. So the PMI and the MIP is there to make sure that doesn't happen again.
Correct.
That's really what it's for.
Well, yeah, that's
to say like, hey, if we get to a point where we're issuing toxic loans again, at least we're not screwing ourselves.
Well, yeah, but the beautiful thing is that now we cannot issue toxic loans. Like there's just so many regulations in line to protect the consumer. Yep. And I love that. And that's what I really enjoy about this industry. I'm going to tell you this, bro. I think I said this on the last podcast. I got into this industry because of toxic loans. I got into this industry because I wanted to make the difference in my community, whether it's one family or 20 families that I can help, whatever amount of families I can help. I want to make sure that that family completely understands what they're getting themselves into. Yep. And here's the thing, bro. Yes, it was the bank's fault. And I completely blame the bankers and the people that were doing the bad things. But we also have to understand that we have to take our responsibility for our actions too. And that's one thing, that's a conversation that 99.9% of the people that went through that are not ready to have, and they will never be ready to have. If I'm making $10,000 a year, what the fuck am I doing buying $1 million home?
I could not agree more.
Javi, talk to me, bro. If I make $10,000 a year, what the fuck am I doing buying $1 million home? Yep. Like seriously, like we also have to understand that there's a lot of due diligence that goes into any kind of investment that we make. Why am I trying to buy something that I clearly know and I clearly understand that I cannot afford just because it's beautiful? Right. I'll tell you this, Javi, bro, I can go out and buy a fucking AMG, a Mercedes AMG cash right now. Yep. Am I going to do it? No, because I should not do it, because I understand that I shouldn't cash out my 401k. I shouldn't cash out my investments. I should not do it. Why? I'm doing my due diligence, brother, to not put myself into a bad situation. 100%. But there's people out there that are not willing to understand and accept that responsibility. And all they want to do is they just want to point fingers. And that's the issue, bro. That's the problem. Like, and that's why I educate, or I try to educate my people, mi gente. Like I want to educate them. I mean, you see the videos that I'm posting out on weekly, bro. Man. I'm trying to share more knowledge. Why? So that you can make a better and a more educated decision.
An informed decision.
That's what I want, bro. I just want people to make informed decisions, whether it's with me or they buy with somebody else. I don't care. I just want you to understand what you're getting yourself into. Yep. Because the thing is, like, we can only point fingers for so long. We can point fingers all day long, Javi, but at the end of the day, who's being affected? Us. Yes. And what are we going to do? Just sit here and point fingers?
You're hitting the nail on the head, bro. No. The nail on the head. Responsibility, when that happens, so a lot of people may not know because they may be new to the market when it comes to buying homes, but in 2005, 2006, 2007, 2008-ish, people were buying homes that they could not afford.
Oh, yeah.
Like, just because you can do it doesn't mean you should.
Agreed.
And the banks took advantage of people who were, I don't know if they were financially illiterate, but they just, I can do it. I can live in $1 million home. Mm-hmm. Well, why not? I work at Foot Locker on the weekends and I make, $20,000 a year, but I get approved for $1 million home. Like, I'm going to do it. Like, just because you could doesn't mean you should. And so you're absolutely right. I think people need to take responsibility. They should have, and they should. And so in that context, the mortgage insurance is good. It makes people, it puts their skin in the game, like you said. You know
for sure, bro. It's like with anything, man. If I have a friend, man, I'll tell you that this easy, Javi. If I had a homie that tells me, let me borrow money, I'm very, very picky when it comes to money. And if I have a homie that tells me, hey, let me borrow dough, and I know that this person doesn't have a fucking job, I'm going to be like, you know what, bro? Like, how about we do this? I can't let you borrow as much as you're asking for, but here, I'll let you have this.
Right.
I'd rather gift you this amount, understanding that I'm not going to get it back, than let you borrow this bigger amount, knowing that I know for a fact I'm not going to get it back.
Right.
Right. And the thing is this, like, the banks also have to get their money back. At the end of the day, everybody has to get money. Right.
Right.
We also have to think of the bankers have to make their dough. They've got bills to pay. Everybody got bills to pay. Right. So yes, it costs a little more money. Yes, there's mortgage insurance. I mean, as a buyer, I hate mortgage insurance. As a bank, as a mortgage professional, I like mortgage insurance because it allows us to get to that position. Plus, you're not married to the mortgage insurance, bro. Most people just pay mortgage insurance for a maximum maybe 3-4 years, and then you can refinance your home. Boom, get rid of that mortgage insurance.
That's a good point. So that's the thing too is, which we'll talk about refinancing. Yeah, a little bit down the road, but that's a good point. So to touch on that a bit, like if you buy let's say I don't know, $200,000 property. Mm-hmm. And you only put 3% down, so you put $6,000 down, right? In order to remove the PMI or the MIP, the insurance, you have to get to a point where the equity within the property is 20% or more.
Correct.
Right? And I should be a fucking loan officer.
There you go, brother. I'm gonna recruit you, bro.
Yeah, but so think about that for a second. So 20% or more. 20% on a $200,000 property would be $40,000, right? Yeah. So now you have to make it the difference of $34,000, right? Yeah. So, but if that property you bought it at $200,000 and now it's worth $300,000 because the market's gone up, you can refinance that loan because now you've met the 20% equity in it and remove the mortgage insurance. And mortgage insurance is expensive, bro. Oh, people don't. So like my rental, when I first bought that, I didn't get the numbers, but I think my mortgage was like, the actual mortgage was like $1,800 a month. But with the insurance, it was like $2,200-$2,300.
I believe it.
So it's a lot of
mortgage, money. Especially for FHA loans, bro. Right. And anything after 2015, here's the kicker, bro. Conventional loans, if you reach that if you reach in conventional loans, they fall off. By the way, it falls off on its own after you reach 78%. Yes. Okay. FHA loans never falls off. After 2015, it won't fall off. It's mortgage insurance for the life of the loan if you don't refinance. The only way to get rid of the mortgage insurance on an FHA loan after 2015 is if you refinance.
Right. And so let's talk about refinancing because there's a lot of reasons why. I guess before we touch on refinancing, let's go through the escrow process and then we'll talk about refinance because refinancing could be a lot of things, right? So now you've gone through the pre-approval process. You found the realtor. You found the home you want. You've gone through the down payment stuff, and now you're getting through the escrow process. Mm-hmm. So the escrow process is, I think, where all the work is really done.
Oh yeah.
And I could be wrong because I'm not in your industry, but I've dealt with it a few times now. And so the escrow process really is. And for those of you that don't know what escrow really is, what it is really is an intermediary, like a third-party company that comes in and kind of holds everything in place in a secure manner between the two parties, the party who's selling and the party who's buying. Yeah. And that really is where you come in heavy too, because that's when you get down to the point of like, okay, we're in escrow now. Escrow meaning that everything's being held in a secure manner between the buyer and the seller. And some days it's, there could be a 30-day escrow, 60-day escrow, 120-day escrow. Escrow can go on for a long time. It depends. Yeah. I think most people like to buy and sell properties within 30 days, but it's hard to meet that because there's so much shit that has to happen in that short period of time. Talk about a little bit about the escrow process, what that is, sort of what it looks like. Because there's a lot to it. I'm sure we can't cover all of it, but there's a lot to it. And that, when it comes to the person who's buying, there's a lot. That's where a lot of the work comes in. Because I mean, literally, I remember the first escrow process I went through. I got a call at least once a day for like 2 weeks.
Oh, for sure.
I need this. I need that. I need this. I need that. Can you give me this? Can you give me that? I'm like, fuck. This is a full-time job, man. But so that's really where the work comes in. Because that's, I think, where there's a lot of vetting actually happening at that point. But go ahead and talk about the escrow process a bit.
So as far as the escrow process, bro, it is about, right now we're averaging about 30 days. It depends on what what the need is. I mean, there's times where I've been able to close deals in 10 days. It completely depends on what the scenario is and really what the nature and the need is for that specific transaction. But When I say it takes a village to close a fucking loan, bro,
It does.
I mean it takes a village, bro. There's so many parties that are involved in the escrow. It's just insane. An escrow company, like you said, I haven't actually heard anybody else but myself or people in the industry describe it so well the way that you did. I'm glad you know it and understand it, bro. It definitely is an intermediary that's just there to make sure that everybody does what they promise to do.
Right.
Escrow is there to basically back up the homeowner. Escrow is there to make sure that everybody does what we're promising the homeowner and the home seller. Right. Essentially, what they do is they pull up preliminary reports, they pull up title reports, they pull up all this information that has to do with the current property, just to see if there's any kind of liens on the property that we don't know of. There's any kind of like money owed to anyone on the property, anything like that. They make sure that everything is on point when it comes to that. They also make the title changes. They do some crazy things in there, bro. I have a lot of respect. They hold money
and compound too. Like they hold money. So like
they hold the money. They hold your earnest money deposit. For those of you that don't know, it's also known as the good faith deposit. Right. It's that first check that you give. You usually hand this check to your real estate agent, and they give that kind of like as a deposit when your offer gets accepted. They manage all the monies. Anything that has to do with the money in the house, they manage that. But yeah, the escrow process is tough, bro. We go through a lot. They're in contact with us, the loan officers. We send all our documentation to them. They cross the T's and dot our I's to make sure that everything is in line, make sure that all the balances balance, make sure that everything that we say that we're going to charge is on there, on the paperwork and everything, all that good stuff. And they basically hold us accountable. They make sure that everything, like I said, everything balances. All the numbers are down to the T. And yeah, that's basically the way that it works. But essentially what we go through in the process of buying a home is, okay, the first thing is a pre-approval, right? After you're pre-approved, you submit your offer. Then you get the residential purchase agreement, also known as the RPA. We receive that from the seller and the buyer. Everything has to be signed by the sellers and the buyers, by real estate agents from both sides. Once all of that documentation is done, it's sent over to escrow. Then it's also sent over to us as the lenders. We make sure, again, we dot our T's and cross our I's, make sure that everything's good on there. We make sure that the loan terms are all based on whatever it is that is agreed on there. Everything is sent, back to escrow. That's basically the way that it works, bro. But there's so many things involved with that. Also inspections. I mean, you got to go through home inspections, make sure that, there's no hazardous issues with the home. You have to go through appraisal, make sure that the house is worth at least minimum what it is that, they're selling it for. Not only that, we have to deal with underwriters. Loan officers, we're dealing with underwriters on a day-to-day basis. We're basically, think of a loan officer as your lawyer. I always like to say we're kind of like your lawyer.
You're a financial lawyer in a sense.
We're your financial lawyer, and the underwriter is the judge. We're trying to put your picture together to make sure that it gets approved, that you don't go to jail or whatever you want to call it, that doesn't get declined. We're trying to put your financial picture in the best position to present to the underwriter, so that the underwriter requests a minimum amount of documentation and also doesn't really, disapprove or doesn't say, no, you're not approved for this loan. Right. So we're putting that together all day long. Some of the common stuff or things that we're going to ask you guys for are things that expire. What I mean by expire, you get a new version of that document. For example, your tax return, or not your tax return, I'm sorry, your bank statements. Bank statements, every single time you get a new bank statement, don't even wait for your loan officer to ask you for it, because we're going to ask you for it anyway. Just fucking send it in. Anytime you get a new fucking a pay stub, just send it in. We're going to ask you for it. Just send it in. Anytime that we need any kind of letter, just start thinking proactively. If you're going to get a gift from your family member, make sure that you already have your gift letter ready to go. Little things like that. But yeah, that's basically the way that it goes. And fuck, now that I'm talking about it, I hope I'm not scaring anybody that's listening to this.
No, it's not at all. No, it's here's the deal, man. It sounds like it's a lot. Yeah. But the reason why it's easier on you as a home buyer is because of people like you. Yeah. Because of the realtors, because of all that stuff. But it is a process. I mean, you are making a huge financial decision.
Oh, for sure.
To go into something in your life. But it's probably one of the more important things. I mean, the American dream is to own a fucking home.
For sure.
You know what I mean? That's like the number one sound basis for like the American dream. Is like I own my own property, right? Yeah. But escrow is the tricky portion of it. You get down to it. And the reason why I think it has sort of a stigma to it is because when you get to that point, you're like, oh, I'm here. Yeah. Like the home purchase is happening now. Mm-hmm. And at that point, shit gets real. You know what I mean? That's when shit gets real. Like, oh, I'm in escrow now. So now all parties have agreed to something. Mm-hmm. We know what the cost is. We know all these other things we have to do. I'm glad you mentioned like the appraisal, the home inspection. So for those of you that don't know, you typically pay someone to come in and give an appraisal. It's usually about $500 or something for them to come in.
Yeah, anywhere from like $450 to $650, depending on the type of home.
About this, bro. I should be doing your job.
You should, bro. I'm gonna recruit you.
Excuse me. But yeah. So the appraisal that has a third party company that comes in, looks at your house. They literally go in with a pin and poke around and look at things and make sure that the furnace is working. The pipes are working. All the basic foundational structural stuff of the house looks good. Yeah. And then they appraise it and go, okay, this house is worth X number of dollars. Yep. And then based upon that is, your loan covers whatever or not. So, you know what I mean? So there's that. I'm sorry, that was the inspection. Not the I'm confusing them a bit.
No, that would be the appraisal.
So the appraisal?
Really what the inspector does is, I guess the appraiser just comes in, looks at the house, makes sure that everything looks good, and gives their best opinion on value. Right. So that's really what they do. They just come in and look. An inspector goes more into detail, make sure that your plumbing is good, make sure that the lights are good, make sure that all these other things. So that's another thing that I will say for those of you that are at the position where you're about to submit offers, but you're scared that maybe the house might have issues. That's what you pay a home inspector for. Yes. The home inspector goes in there and tells you everything that should be repaired. Right. They give you an opinion based on their knowledge. A lot of these people are just generalists, right? They don't focus on one specific trait. They're just generalists. They know a little bit of everything, which means that maybe their opinion might not be the best, but they're going to give you their best opinion. And that's the thing. Like an inspector is going to say, okay, for example, I don't know if there's issues with the gas lines, right? Right. Oh, there's issues with the gas line. You should definitely take a look at this. This now is considered a hazardous issue. Why? Because if you leave the fucking gas on and the gas is leaking at night, what's going to happen? You're going to die. You feel me? Like you're probably going to croak.
They're there to save your ass.
Yeah.
And to be honest, they can do a good or a bad job. In my personal experience, they kind of screwed me. So the inspector who did my first property I bought, just a real world story to kind of give you an example of how it works. They came in, they said, hey, we checked everything. We checked all the gas lines. We checked the lights. We inspected everything. They didn't inspect the furnace too well. Yeah. And the furnace that I had, with the furnace being a heater, right? Mm-hmm. I had a cracked firebox in it.
Oh, shit.
So when I bought the property, because the inspector didn't put that in the notes, didn't catch it. Yeah. When I was there and I went to have the gas turn on, day one of moving into my house, they red tagged it and said, you can't use this furnace because it's a cracked firebox. Yep. So now I was liable for, I don't know, $3,000-$4,000 to replace that.
Yep. And the fucked up thing, bro, is that if you're red tagged, you're fucked.
Yes, because they won't turn it on.
Yep.
So I had no gas, which means no cold, no warm water, no whatever. So I had to go replace that furnace. Yep. Now now there's another type of insurance. When you buy a home
warranty,
that's supposed to cover that.
Yeah.
But when I called them, they screwed me over and said, no, can't cover that. Blah blah blah. Inspector didn't catch it. Not our problem.
Yep.
So the inspectors are there. They can do a good or a bad job, but they're there. They are there to save your ass.
Yeah, and a lot of times I would say, do your research, especially like nowadays. When you bought was a very different real estate market.
It was December of 2012.
Yeah, bro, that's a while, and it's things are very different now. What I always recommend for people to do is make sure you know who you're doing business with, and if again, that goes with establishing a good relationship with your real estate agent. When you're choosing a real estate agent, make sure that you choose someone that's has been in the industry, someone that's truly doing their best to give you, great service and really is going to take the time to understand what you need, because they're probably going to have the right type of partners involved in their transaction. Why? Because they care. Right. There's so many real estate agents out there that do this part-time or only do this like on the weekend. And it's like, dude, no, you have to work with someone that cares, because if you work with somebody that just doesn't really give a fuck, just does this as kind of like a side thing, right, you're going to get those results. Yep. You got to work work with someone that takes this serious. Like I can't stress this enough, people. Like, this is the biggest purchase you're going to make. Work with someone you like. Right. I would hate doing business with someone that I don't like. Like, I fucking hate that.
And that person's they're going to know everything about each other over the period of time.
Oh, for sure. You might
as well find someone you like to work with. You know what
I mean? With 95% of my clients, I become close friends. Yep. Why? Just because I get to know them on such a close level. Like, and the other 5% is just because they're investors and they're just in and out. Right. But 95% of them is like like, I know you. Like,
Right.
we're cool. Like, I know your struggle. Like, let me help you
eat
out.
Jack in the Box 10 times a week, folks.
Oh, I can tell, dog. Hey, shit. Why are you subscribed? Why are you subscribed to my cousin's OnlyFans? No, I'm just kidding.
Hey, you know what's crazy? It's all in the bank data, dude.
That's another thing I'll say, guys. Yo, data, just give me a heads up to my dudes out there or ladies. Anyway, just give me a heads up. I'll stay quiet. But like, I've seen some crazy stuff, bro.
Even when someone comes in, they get like their OnlyFans chick, right? And like, hey, here's my.
I've actually had clients.
I know. I'm sure. Like, here's my income. Like, oh, I know what you do.
I know what you do for a living. Hey, it's cool, bro. Do your thing. You know what I mean? No judgment. That's another thing, bro. When it comes to that, I don't judge, bro. I mind my own business. You feel me? Like, I'm here to help you achieve one thing.
For sure.
I'm not here to judge you. I'm not here to fuck that, man. Do whatever makes you happy, whatever gets you your dough, or whatever you get off on, do it. I'm just here to help you get, achieve a goal.
Hell yeah, get your money. Yep. So back to the escrow process, right? So now we've gone through all that. There's a lot of do's and don'ts when it comes to the escrow period. Mm-hmm. So, like, what things shouldn't you do when you're in escrow? Because that shit can screw up a loan approval real quick.
Yeah. The main thing, don't fucking run your credit. Please. Don't fucking run your credit. Yeah. As soon as I've ran your credit and I've told you how much you qualify for and you're out there and you're buying and you're in escrow, please don't fucking co-sign for nobody. Don't nobody need your credit more than
don't
you
go
at
buy
this.
That Honda Civic.
You don't need that Honda Civic. Stop. Don't.
Right.
But and main thing is, look, I always tell people, until you have keys in your hand and you are moving into your fucking house, don't buy anything on credit. Believe me, the sofa from IKEA can wait.
It can wait.
Okay,
yeah.
You don't need the sofa from IKEA.
You haven't got your keys yet. Why are you trying to buy furniture?
You don't need to buy. Oh my goodness, bro! I've talked this on video so much. I've said this on video so many times. When I first started in this career, when I first started in this business, I actually feel bad. I ended up helping them buy a year later. But anyway, I had a client. They lost their deposit, $5,000. They lost the deposit of their earnest money deposit, a good faith deposit. They lost it because the wife decided that she wanted to go shopping for furniture a week before she got keys. 1 week, bro. I was so fucking pissed. I was upset. And the thing is that at the end of the day, everybody looks in any transaction, bro. Everybody looks at the lender and everybody points fingers and says, fuck you to the lender. Right. Everybody points fingers and says the lender did it. I'm like, dude, how the fuck do I control that? I give you a list of things that you should and shouldn't do during escrow. If you don't follow this, you're not reading the instructions, sweetie. Like,
wait, so the earnest deposit can be taken?
For sure.
If your loan doesn't get approved?
Yep, 100%, bro.
I learned something new today.
Well, if you remove contingencies, if you remove loan contingency, a contingency is basically what protects you as the buyer from any kind of issue. So loan contingencies are usually good from 17 to 21 days. Okay. After the 17th day in escrow, you have to remove that, which means that you are fully approved 100% for the loan. Loan approvals usually take anywhere from about 15 to 20 days.
Right.
So depends on how aggressive you go in with your offer. It's going to be anywhere from 17 to 21 days. Gotcha. After day 21, you have to remove that loan contingency. When that loan contingency is removed, you're basically fucked. If you don't get approved for the loan, you lost your money.
Gotcha.
But it's also good because that contingency protects you up until day 21. So if on day 15 you realize like, yo, there's some shady shit going on, like I don't think we're going to qualify for this, boom, you can pull out, peel out, I'm out. You take your money back and that's it. You get a refund from escrow and you're good. But after day 21, you're fucked. Again, every situation is different. You have to check and see what it is that you put on the offer. You can check with your real estate agent. The agent knows exactly how many days you have to remove loan contingency, and a great a great real estate agent will tell you every single time when they remove appraisal contingency, when they remove loan contingency, and when they remove inspection contingency. Like any contingency that's removed, a great real estate agent will tell you the moment it's going to happen.
That makes sense. I didn't know that, so that's good to know. So, don't run your credit during escrow.
No. Also, don't move money around. Another thing is don't move. Like, if you're in escrow and it's 30 days away from getting your house keys, there's no need for you to put $1,000 or $2,000 into your fucking bank account. Anytime, I just say this, anytime you make any kind of financial choice, make sure that you're speaking to your loan officer. You and your loan officer, you're going to become best friends. You want to make sure that anything that has to do with money or finance, you speak to your loan officer if it's more than $100. If you're going to move more than $100 from your bank account, call your loan officer and ask them if it's okay to do it.
Right.
You don't want to do anything whatsoever to ruin your opportunity, for becoming a homeowner.
And I had a separate. So I've since I got into buying homes and that kind of thing, I've always had a second account that's used just for the home piece of it. So
that's a smart move.
So that I don't have to worry about moving money in and out of it. Like here, there's $1,000 in here. So what I'm going to use. And I'm not moving $200, $300, $400, $500, $1,000 in and out of that account for any reason other than for what's on the purchase piece of it. You know what I mean?
Yeah, and that's a smart move on your end, especially because, you understand that maybe you have other expenses and you're doing other things with your other accounts. That's fine. I just need to see where the money's at and make sure that account, there's no money movement on that.
I just don't want you to see my romantics purchases on.
I mean, whatever it is, brother.
Just kidding. But what about like changing jobs? Or is there anything else that can really affect it?
That's another. Oh, there's so many things that you shouldn't do during escrow.
I'm telling you, I should have a job.
Yeah, you should, bro. I'm gonna hire you, dog. So I'm gonna just run through them. Don't renew your credit. Don't move money. Don't switch jobs. You don't want to be going from job to job. I don't care if the job is paying you more. I don't give a shit. If you're going through your 30-day escrow, listen to me. Don't do anything stupid within 30 days, please. Don't travel out of the country. I've also had clients that are traveling and they expect me to still take care of business. I'm like, look, I will to the extent that I can. But then if there's documents that I need you to sign, I'm sorry, but I'm not forging your fucking signature.
Right.
Like you gotta be here to sign. Like, don't be traveling. Don't do anything that you think might cause an issue. I think it's very common sense, a lot of the stuff that you shouldn't do. But I'm realizing more and more common sense isn't really as common as I thought it was.
Common sense is not common.
Like, don't run credit. Again, I've said the third time, guys, and I promise you there's still people on here that are probably going to make that mistake. Don't run your credit. Don't switch jobs. Don't move your money around.
No big purchases.
Yeah. You don't need to put anything on credit. No co-signing for nobody. I don't care if your nephew wants a car. Tell that fool to wait. Little Jaden can wait for his fucking car. Tell his mom or his dad to help him out. No switching jobs, none of that. And don't go on disability. Nope, none of that. Don't do anything like that.
Yeah. So that's really important stuff, man. So now we've gone through the whole process. We bought a home now, right? We get our keys.
Yeah.
And there's a lot of stuff that people don't realize that gives you a lot of opportunity when you own a home.
Yeah.
So, for example, we talked about equity, right? So, equity means if I bought a property a year ago for $300,000 and today now it's worth $400,000.
Yeah.
So if someone appraised it today, it's appraised at $400,000 versus $300,000. That means I now have, I don't know what that's. I should use a better number, easier number, but 25, 30, whatever percent equity in the property now, right? I have $100,000 to work with in that property.
Right.
So you can utilize and leverage your equity in a property.
Oh, for sure.
For stuff like a refinance. So I'll give people an example, and I won't talk too much about my personal numbers too much, but my rental, for example, I refinanced it a little bit over a year ago during when Corona happened, and I pulled out like $25,000 from that because it was doing so well and it has so much equity in it that I was like, okay, I'll refinance it. I'll get a lower APR percentage, a lower interest rate. My payment's going to go down. And instead of doing a 30-year loan, now I'm at a 20-year loan. My payment goes down and I get to pull out $25,000.
Yep.
Then I took that $25,000 and I remodeled this house.
Yeah.
So now I have a cheaper payment at my rental property. I've gone from a 30-year loan down to a 20-year loan and I pulled out $25,000.
Yeah.
So you can leverage properties quite readily and quite easly in a market where property values are constantly going up.
Oh, for sure. Especially in a market like this, like today. I'm glad you brought that up. One of the big benefits of being a homeowner is that you get to leverage equity, bro. And I've talked about this so many times on my Instagram, bro. Equity is like the shit, man. I guess like a gift from God. You know what I mean? Like it's one of those things. I consider it kind of like a savings, kind of like a future ability to invest. It's leverage, bro. And a lot of times I tell people, don't see your house, your personal house, the one you live in, don't see it as a liability. Don't see it as an investment. Just see it as leverage. Right. See it as it's going to be there whenever you need something. Right. You feel me? Yep. And especially like a market like today, for example, where interest rates are extremely low. They're in the last 30 years, this is like a record breaking low and continue to be at this low rate. and house values are extremely high. What does this mean? This is like a perfect moment for any homeowner to consider cashing out on their investment.
Refinance.
Refinance
or cashing out.
Refinance, cash out, whatever you want to do. A lot of times for those of you that have a lot of equity, which is the difference between how much money you owe versus how much money your home is worth, pull out as much as you can. The maximum that most loan spots are going to let you, or lenders are going to allow you to pull out, is about 80% for a first mortgage. Some of the home equity lines of credit are going to allow you to go up to 95%.
So again, 80% of the equity.
80% of the value.
Of the value?
Yeah.
Oh, I thought it was just the equity.
So let's say, for example, just to give you a round number, if you own a house that's worth $1 million and you owe $500,000, technically you would be able to go up to 80%, which means 800,000.
Wow.
Yeah. So you'd have that difference. You know what I mean? It just depends again on the type of lender that you use and what kind of lender you use, which is they'll let you know what the max on what you can pull out. Some places say that the maximum they'll give you is 100,000, some 150, some 250.
But again, be smart.
Exactly.
Do what makes sense, because at the end of the day, there's a number tied to that you have to pay back.
Oh, for sure. And that's one thing that I tell people all the time. Like, look, yes, it's beautiful to own a home. Yes, it's beautiful to have equity. Yes, it's beautiful to have money that you can pull out of your equity. But at the same time, due diligence, baby. You got to do your due diligence and understand that, okay, yes, I'm pulling this money, but I also have to understand that either this is going to make my interest or my payment go up, or this is also going to, allow me to invest into something else or whatever it is. But you have to understand that it's your responsibility to still be able to make that payment.
Yep.
It's not the bank's responsibility. It's your responsibility. If you're asking for the money, you can take it, but you also have to understand that it comes with that big responsibility of having to pay back. So that's another thing that I tell people. Cash out on your investment. Pay off your credit cards.
Yeah.
But don't get back into debt. Don't do that same bullshit. Like, why are you going to pay off your credit if you're going to get back into the same debt? Like, nah, don't do that. You're just
shifting money from one bucket to the other.
Exactly.
But that's also a very powerful tool, too.
It's extremely powerful, bro. Extremely.
That's one thing that my mom told me when I was young. See, I was blessed to have had a family that got into real estate when I was a young kid.
Yeah.
I think the first property they bought was in Bakersfield. I think I was like in 6th grade or something like that. And so my parents went through the gamut of buying properties, selling properties, that kind of thing. Mm-hmm. And I learned a lot because I paid attention. I asked a lot of questions about it. You know what I mean? And refinancing is a huge, huge tool you can use to get ahead, but you got to be mindful and respectful of it. Like I said, don't just because you can, don't mean you should. And moving money from one bucket to another bucket. Like, so all essentially, if you're just moving money from, you're adding debt on top of your mortgage already, right? So if I had a $200,000 property and $200,000 property, and now it's worth $300,000, I want to take $100,000 loan on top of that, refinance and pull that out. Now my loan, instead of being $200,000, is now $300,000.
Yeah.
So my mortgage goes up a bit, right? So you're robbing Peter to pay Paul, right? It's the same.
Correct.
Right? But if you're smart and you can move, this is one thing my mom taught me, if you can move money around like that and consistently move it, you can leverage that.
Oh, for sure.
You can leverage it very smartly. There's a lot of ways to leverage that, right? So refinancing is a huge tool. And one thing is people don't pay attention to things like APR rates, interest rates, right?
Yeah.
So you would be wildly shocked. I think most people would be shocked if they saw what somebody who paid, and this is a wild number, let's just throw it out there, 8% on a loan, right? It's insane, right?
That's an average market, bro.
Is it really?
Yes, sir.
But isn't it like 3 point something today?
Yeah, but we have to remember, here's the thing, like a lot of people nowadays and people that are jumping into the ability to buy right now, we've been spoiled, bro. And I'm going to say it's the millennial community. We've been spoiled so much when it comes to interest rates on properties. We don't know what a real interest rate is, bro. No, we don't. A striving U.S. market in real estate is 6%. If back in the day, if you were to get a 6% on a mortgage, dude, you're fucking jumping up and down, excited as fuck because you had a 6%. Here's the thing: that's a normal market. That means that the banks are making money, the investors are making money, everyone's making money. Right. You guys have to realize that the only reason why we're where we're at is because Donnie, he worked with the the CARES Act.
Yep.
This is all still part of the CARES Act. There was so much money that was invested into the 10-year treasury and into mortgage-backed securities that are keeping interest rates low. Also, banks want people to refinance. Why? Because so many jobs are created. When anybody refinances, a shit ton of jobs are created. When anybody purchases a home, a shit ton of jobs are created. We're talking about landscapers. We're talking about inspectors. We're talking about people in title, people in escrow. We're talking about realtors. So many people get a job from one transaction. On average, I'll tell you guys this, it takes about 50 people, 50 humans to close one transaction.
See, people don't realize that. That's one loan.
Like, that's one loan.
And see, and Donnie, he had the money down. Everyone loves to hate him, right? Everyone loves to hate him. But he had the business side down. And the mortgage, the interest rates were just so low.
And not only that, but the guy understood that we needed to figure out a way to continue to have America's driver churning. You feel me? Like we had to continue to have America's main source of wealth continue to grow, which was, I mean, let's be real estate agents and loan officers, we sit in the driver's seat of the economy. I mean, I don't know what you guys consider more what, I don't know what else is out there that would create more jobs than this in one transaction. Like, I really don't. I mean, oil, not really, because the U.S. doesn't really, you know what I mean? So to me, it's real estate, man. Anybody that's in the real estate industry, we are sitting in the driver's seat.
It's a lot of money, man.
Oh, for sure, bro.
Yeah. And people don't realize, like, you know, today, I don't know what the percentage is today. I'm assuming it's 2 to 3% around today. Is that where it's at? Like the actual, what's the average federal rate today?
I actually have not. I haven't checked an update on that.
I'm guessing. I don't know, 3-4%. I don't know where Biden has gotten it to, but I know
at one point it was at zero.
So, it was zero, which means you can finance a $500,000 home for 0% interest.
Well, no, it wasn't that. It wasn't like that.
Okay.
So what they mean when the federal rate goes down to zero, it means how much money is the federal government charging banking institutions to borrow money.
Right.
Which means,
but they base their rates on that, though.
No, their rates are based on whatever they want them at. So the federal government.
But what I'm saying is that those people that are lending the money,
right,
know that I have to pay X number of dollars back to.
But they got to get their haircut.
Right. Exactly.
They have to get their haircut.
Exactly.
So let's say, for example, that the rate is at 0%. Then they'll say, okay, my bottom line, just to give you guys a closed number, my bottom line is 2%. Right. I have to make 2% on top of whatever it is that the federal government is charging me in order for me to make money for my investors to keep everyone happy.
Correct.
So if 2% is my bottom line, what does that mean? Interest rates are going to be at 2%. Why? Because the federal government is saying, hey, Mr. Bank, I'm going to charge you. Excuse me. The federal government says, hey, Mr. Bank, I'm going to give you $1 million. Go make money with this.
Right.
And then Mr. Bank says, okay, well, how much are you going to charge me for this? And the federal government says, I'm not going to charge you anything. I just want you to still stimulate the economy. Make whatever you need to make on it.
Right.
And then the bank says, well, I only need to make 2%. So I'm going to offer lower rates than the other bank so that I get the loans.
Right.
And I make money on it. So they'll say, okay, I'll only charge 2.125. Right. So then 2.125, I keep 2%, and then 0.125 will go to the investors, whatever you want.
Right.
Right. So that's the way that they do it. So when the rate was at 0%, it was for a while. That's how these banks were. And this was more for consumer loans. That's another thing. The federal rate usually affects consumer loans. Mortgage rates are affected by mortgage-backed securities and 10-year treasury.
Correct.
There's so many, again, bro, there's so many things that go into this industry.
When I refinanced a year ago, it was like 3.75 or something like that.
Oh, you're still good, man. You still had,
awesome rate, right?
You still have,
awesome. Like,
I'm sure when you bought it like maybe 5%.
No, I bought it 3.23. Actually,
FHA.
Up, yeah. FHA, because FHA, it's federally backed loans, right? So they.
But you were also paying the price with mortgage insurance.
PMA, exactly.
Yeah, PMI. Yeah.
PMA.
There you go.
Yeah. So that exactly. So it's all, again, it's knowing the laws, the tax rates, it's knowing everything out there, the interest rates rather. Yeah. It's really, it's a game, man. It's really game. It's a game. And I told you this earlier as a joke, but like Snoop Dogg said this shit in the 90s, man. Mm-hmm. Once you know the game is to be played. And that's
for sure.
I want this podcast to kind of put into people's minds that, man, it's not as hard as you think it is, but you do got to do your homework.
For sure.
You do got to understand kind of the laws and kind of those things. And by the way, I'm going to put this out there. We should have said this at the beginning of this podcast, and I'll probably burb this in. we're not giving anyone any financial advice.
No, we're not
like that whatsoever. We're just talking about our experiences and what we know. But at the end of the day, the more you know, knowledge is key, man. And the more you know, the more financially successful you can be at this game. You know what I mean?
Yeah. And I agree with you. Anytime I give, I always like to tell people, I don't give you financial advice. I just share with you my opinion and my experience. Right. And that's it. At the end of the day, you got to choose for yourself. You got to choose what is best for you. Yep. Because it's not whatever might make sense for me financially might not make sense for you financially. And that's what it is, bro. But yeah, man, I'm glad that you're so willing to share this because it's true, man. It's this whole thing about money and income and wealth. It's a game, bro. And like you said, once you get it, bro, once like Snoop Dogg said, once you understand it, once you get it, this game is to be played, bro. And you have to understand you got to stay on your A game.
And it's all knowledge, bro.
Oh, for sure.
Like I said, I was very blessed to have parents who, and my mom's extremely smart, man. She's always been financially very, cunning and aware when it comes to finances. So I was very blessed to have that in my life and to still have that. I mean, we get on the phone and talk about shit. Like we talk about shit like this for an hour on the phone, People call their mom, they talk about whatever. And her and I were just talking about, oh, what about this property? What about that? And, we get to have that kind of conversation and it's, and I think she respects the fact that I'm into it, this is a thing. And it's because, and again, and I want to say this as respectfully as I can, but I really feel like us Latinos, and I touched on this early on in the podcast, but I feel like we're just not financially educated enough. Yeah. I feel that we struggle in that area and we make some poor decisions and it's not because anyone's stupid or whatever. It's just people are unaware of these things. And I was lucky enough to be made aware of these things as a young boy, as a young man, rather. And I really feel it's kind of really important for me to kind of give back to people. And I want people to make better decisions, man. I read a book years ago, and it's a very popular book. And I mean, you may have read this, but Rich Dad, Poor Dad.
Oh, for sure, bro.
Yeah. Right. So everyone's read that book, right? I read that back when it came out in the late 90s. Somebody who was a mentor to me said, "Hey, read this book, man. This is important for you. I think personally for you." And so I read it, and I instantly kind of resonated with the book. And that whole book is about how somebody grew up in a family where his real father, his biological father, was like a principal of a school in Hawaii. But he just, all he cared about was this 40-hour-a-week job. And that was it. He kind of took the traditional path of going to college, getting a degree, getting into the workforce. And then this kid met a best friend, and his best friend's dad was a businessman. And the entire book could be summed up into one thing for me. And that is that he learned a lot from his business. He called them his rich dad and his poor dad. Yeah. His poor dad was his dad, and he didn't mean it in a bad way. His poor dad was his biological father who went through traditional learning school, 40 hours work a week, traditional family, that kind of thing. But his rich dad was his dad who was in business. And when you read that book, the one thing that really resonated with me was, what do we talk about at the dinner table with our families? Yeah. And in that book, he says, the only real difference between my rich dad and my poor dad is what we talked about at the dinner table. With my poor dad, we talked about sports and we talked about, what was going on in the tabloids and whatever else. He goes, but at my rich dad's table, when I was at their house, he would talk about investments and the stock market and real estate. And as you know, Robert Kiyosaki, he's the author of that book. He's a huge real estate investor. That's kind of that's how he got rich. Yeah. And so I've always taken that to heart and thought like, man, I really wish, to me, when I read that, when I was, my late teens, early 20s, I'm like, man, this is important. Like what I want to talk about real stuff. I want to talk about the real things, things that I think matter. Yeah. You know what I mean? It's cool, man. I'm a huge sports fan, right? I love the fucking Dodgers, right? I'm wearing a Dodgers hat right now.
Same here, bro.
I love those Dodgers. Yeah. I'm a huge Niners fan. Like I'm big into sports too, but I spend the bulk majority of my life teaching my brain about these other things that I think, help us get ahead. You know what I mean? And so, spreading the word to people as much as I can. And I'm no expert, you know what I mean? I think I know a little bit, right? But being able to teach others some of these things, I think is critically important for other people to be successful. And because it's frightening, man, you know what I mean? It's frightening to go into, oh, I'm going to buy a $500,000 home. How could I ever afford that? And it seems frightening, right? But when you spread that over 30 years, it's not that bad. Yeah. Especially if you know the rules to the game. You know what I mean?
Oh, for sure.
Hopefully this helps people out, man.
Yeah, no, and I think at the end of the day, that's really what the goal is with this podcast, right? With this episode is just to share with you guys the knowledge, and at the end of the day, I guess also open that door, bro, because I feel that once this is dropped, we're also opening that door, for people reaching out and talking to us about it and asking us questions about it. And I mean, I think to me, I'm an open book when it comes to that, bro, and I'm always willing to help people as long as you're willing to listen. That's always my thing. If you're willing to listen, I'm willing to speak. And that's the thing. Like if you want to chop game about this, I do this for a living, and I've been doing it. I gotta say, Javi, bro, I've been doing this for a little under 8 years, a little bit under 8 years. I started really young in the industry. Yeah. I want to trade this for the world, bro. I love it, and I feel like I haven't really had a job. Like, it's just my job, bro, is to educate people, help people, right? And that's really it.
Sounds like fun, man. Might have to pick it up as a part-time job.
There you go.
Get a couple loans to make some extra cash.
Hell yeah, bro. Hell yeah. It's a great industry to be in, bro. And over everything, just helping people understand really what it is, and invest our money into something, something else. We don't need that new truck. We don't need those new wheels. We don't need not yet. Because eventually our investments are going to pay for it.
But you can get that.
Oh, for sure. Sure.
I mean, not bragging, but I have a fucking dope ass luxury truck.
I was actually talking to my girl about that when we got here. I was like, oh fuck, look at this fucking truck. This thing's badass. Yeah.
But the only reason why I had that is because I invested in property first.
Exactly.
And I waited years to get through the first few years of that to be able to, like, okay, now I can buy. You know what I mean?
I'm sure you didn't have that at first.
Yeah, well, Too Short said it in the 90s, bro.
Yeah.
Don't buy a $200,000 car before you buy a house.
There you go.
He said that shit. Yep. Too Short said that a long time ago. You know what I mean? And he, it's funny because I remember these things that these rappers said back in the day. Yeah. And it's because they were becoming aware of business. And they're like, hey, man, we make some dumb decisions. You don't need those 20-inch rims on your lowrider right now.
Yep.
Buy that house first.
J. Cole and Nipsey Hussle used to say, rest in peace, Nipsey, bro. He used to say it too, bro. Like, we got to come back and buy the block. We got to buy the hood. You know what I mean?
Yep.
Like, they're thinking about things like that. Like, and I feel like the more we are willing to listen to these things, and yeah, maybe this isn't exciting as like Cheese Me Out, and this isn't exciting as exciting as talking smack or bullshit or sports, or it might not be as exciting, but this, to me, this is what's going to help us get to that next level.
Absolutely.
You feel me? Like, we want to get on that level too. Like, we want to make big bucks. We want to know how taxes work. We want to know how buying a house is. We want to know how owning homes is. Like, we want to feel like we want to be the landlord too. Right. Like, and in order to get there, we got to be open to this kind of stuff.
And I think this is the perfect conversation to have, because I mean, one of the, a really wealthy person will tell you real estate's a bad investment.
Yep.
Right. That's a wealthy person though, because they can put $20 million into being the person who funds the loans.
Exactly.
And that's where they're getting their money. Right. But for the middle class, home ownership to me has been a great investment for my family. It's been an awesome investment. And there's a lot of loopholes that you can use. For example, I wanted to talk about the 1031 exchange.
Oh, yeah.
Which is something that people don't realize. And it's one of the biggest tax loopholes that the lower and middle class people of this country have.
Yeah.
It's one of the only ones where you can put away hundreds of thousands of dollars, maybe potentially millions right now. Today, the laws are going to change, but today, and not pay taxes on it.
Oh, for sure, bro. Yeah. We were talking about this stuff earlier, bro. A 1031 exchange is a very beautiful thing right now.
Yes.
Right now. Because things could change, right? But as of today, the 1031 exchange is a very beautiful thing. I mean, let's say, for example, you own a house that's worth $1 million, and you only owe $200,000 or $300,000, $400,000, whatever you owe on it. You could take that money and apply it toward your next home purchase, tax-free. If you were to take that house that's worth $1 million and sell it, you're going to pay capital gains on whatever it is that you don't. You're going to pay capital gains on the difference between how much you owe on the loan versus how much you take home. Right. You're going to pay capital gains on that. Capital gains on that's insane, bro. You're going to pay a shit ton of money to Uncle Sam.
30+%.
Exactly.
Depending on your tax bracket, it's like 30 to almost the tail end of 30.
Yep.
Under 40%. It's a lot.
You're going to pay a lot. You're going to pay a shit ton of money. However,
so let's get people, just so people know, not to cut you off, but just so people know.
Yeah.
Let's say I owned a property and it was worth $300,000.
Yeah.
I only owe $200,000 and I sold it. Now I have $100,000, right? Mm-hmm. If I don't 1031 exchange just to defer the taxes on it, deferring means put it aside.
Yeah.
That means I would pay $30,000 to $40,000 of taxes.
Let's say on the lower end,
on the lower end,
30%,
on the lower end,
$30,000.
Yeah, $30,000. That's so much fucking money.
So you only take home $70,000 out of $100,000 that you made.
So much money. But people don't know. Sorry, man, I didn't mean to cut you off.
No, you pay a shit ton, bro.
Yeah.
Like you said, you 1031 exchange that puppy. You take that money, You invested into another home. You invested into whatever it is, but you invested into another house, and you're good. You don't pay tax on this.
Right. Yeah. So there are some rules there. So there's some rules you have to follow. Some of the ones off the top of my head I know. And so what we're saying, people, is that if you have that $100,000, so I'm now, I had a property that was worth $300. I'm sorry, worth $300. I owe $200. Now I've made $100,000 on selling that property. You can do a 1031 exchange, which means you put that money aside, and then you have basically 180 days or 6 months to buy another property.
6 months, yeah.
Of equal value or more, and you can take that money, put that into that property without paying $1 in taxes.
Correct.
So that $100,000 can now go into your next property. Remember we talked earlier about like this isn't your forever property?
Yeah.
So now your next property that you're buying that's bigger and better and has a bigger backyard maybe, or maybe has more bedrooms or whatever it is.
Yep.
You can take $100,000 you made on that property and put it into your next property.
Yep.
And not have to pay $1 in taxes. And there's some stuff you have to abide by. So for, to stop people from flipping property and stuff like that property has to have at least been rented or lived in for a year.
Yep.
The property values that, you sell it for versus what you're buying. So if I sold it for 300, I have to buy something for at least 300 or more.
Yeah.
There's a few things you have to follow guidelines, but the reality is you get to skirt taxes on hundreds of thousands of dollars, potentially millions if you wanted to today. Now, unfortunately, we'll talk about Biden. Unfortunately, his tax plan. So he just created a tax plan recently. Yeah. And in his tax plan, what he's trying to do in that tax plan, because he's going directly after the middle class to recoup his taxes for all the welfare stuff he's doing.
Yep.
And unfortunately, like the middle class is going to pay for that. That's really what we're here for, to pay all the taxes.
And those are the things that, those are conversations that a lot of people are not ready to have, bro.
They're not.
Like,
nothing's free. Nothing's free.
Nothing's free. Anytime there's any kind of government aid, anytime there's any kind of government help, it's the middle class that's going to pay for it. So it's not the lower class. It's 100% not the 1%.
Yeah, it's not the 1%. Yeah. The middle class. So what?
We're the ones that are fucked. We're the ones paying for it. Yeah.
All that stimmy money that everyone got, that's everyone's excited about. All that stuff, the middle class is now going to be suffer for that. And so some of the programs he's putting, some of the tax law he's trying to write into the tax code now, is basically saying that on the 1031 exchange, if you make more than $500,000, then you have to pay those capital gains on it.
Yeah.
So if I bought a property for $500,000 and now it's worth $1 million, that $500,000 I take and put into another property, I would have to pay some level of taxes on potentially, or actually more, whatever exceeds the $500,000, I would have to pay some level of taxes on, which is like one of the only tax loopholes the middle class has. And a lot of us live in the middle class.
Yeah.
And so we're going to, I just want people to know that like knowledge is power. Like when you have knowledge of things, you can make a lot of money if you know how to do it. There's a reason why wealthy people have CPAs. There's a reason why they have financial lawyers and stuff like that, because they know that, hey, there's millions or billions of dollars on the line here. I should know how to secure my money.
Oh, for sure.
I see no problem with that. People get really upset and angry, like, oh, well, the rich man or whatever. Like, no, you can be part of that too.
You can be part of that too, bro. Yeah. I have a financial planner.
Right.
I have a financial planner. I have a financial advisor. I have a business planner. I have a CPA. Right. I have these things. I'm nowhere near becoming, or one day I'll be a millionaire, but I'm nowhere near being a millionaire right now. Right. But I have these people on my team. Why? Because it's important for me to learn these things now, so that when I do get to that position, bro, I already know what to do and what not to do. Right. They're helping me on whatever I'm making now, and they're helping me save money. So the thing is that no matter what level you're at, I don't care if you make $20,000 a year, $30,000 a year, $100,000 a year, $200,000, whatever you're making, you can definitely benefit from working with a CPA, from working with somebody that understands tax law better than you. Remember, you have to work with people that know more than you. Right. The thing is that I can't sit here and do taxes, bro. Like I do mortgages. You could talk to me about mortgages all day long, and I'll school you on these things, and I'll help you and I'll teach you.
Right.
But you talk to me about taxes, I'm going to sit down and shut up. Yep. Because I don't know shit about it.
Exactly.
It's not my profession. It's not my specialty, and I don't spend every single day of my life doing it.
Right. I've had the same tax man for 20 plus years now.
And I'm sure they've helped you out a lot.
Fuck.
There you go.
Big time. And anyone who gets upset and says, well, you don't want to pay your taxes. Of course, I don't want to pay as much taxes. I already pay a shitload of taxes. If I have the least amount of taxes I can pay, the better.
Of course.
You know what I mean? The better. And that should be for everybody. Yep. Anybody who tells you no are full of shit, in my opinion.
Oh, for sure.
Anybody who says, I could do this thing legally to not have to pay taxes and don't pay that much, and they're going to pay more because they say they, it's some moral quandary with them.
Yep.
Whatever, man. You know
Bullshit.
what I mean? Bullshit.
Yep.
I'm over it. You know what I mean? Let's all win and not stop the whole. There's this whole stigma about people that try to conserve money and whatever reason is like being bad. It's just stupid. Whatever. But okay, so is there any particular time that you can think of, right? So as a loan officer, in your experience of where you can say, hey man, maybe you shouldn't buy a property. Like is there can you think of any times where like maybe it doesn't make sense to be a homeowner?
The only time it doesn't make sense to be a homeowner, bro, is when it doesn't fit your financial picture, is when you cannot see yourself staying in the same area for at least 2 years. Like if I'm traveling somewhere for work and I know that my contract there is only for 2 years, why should I buy?
Right.
There's no point for me to buy there. You feel me? If I know that I'm going to go back to wherever I'm from, there's no point for me to be buying a house there. The thing is, there really is never going to be a perfect time besides 5 years ago. Right. And next year, when you ask me that, guess what I'm going to say? 5 years ago. And the year after that, I'm going to say 5 years. I'm always going to say 5 years ago. Exactly. And the reason why I say that is because equity is being built by other people. That's not me.
Right.
Feel me? The best time to buy is when you can afford. The best time to buy is when you can financially fit that. The best time to buy is when you are ready to.
Yep.
It's not when anybody else is ready to. It's not when people tell you, oh, you have to buy. Like, well, maybe I'm not ready to buy right now. Maybe I don't want to buy right now. Maybe I need to wait because it just doesn't fit my goals.
Right.
Maybe I want to travel the world for the next 5 years. If that's your plan, fucking go for it. Then you shouldn't have a mortgage. Or maybe I want to, settle down and start a family and do my thing. Well, maybe it's the right time for you to consider buying. The thing is that everybody's life is so different, bro.
Right.
Everybody's plans are so different that it's really hard for me to say, okay, this is the right time to buy. The best time to buy is when you can afford it. The best time to buy is when your taxes are right, when your credit is right, when your income is right, when your down payment is right. The best time to buy is when you can afford, bro. That's really the best advice I can give. There really isn't anything else I can say to that, man, because everybody's situation is so different.
Right. And I think people, I think we might touch on this a little bit earlier, but people often talk about like, I'm not ready, I don't have the money, or the market, maybe the home prices are really high right now versus not as high 10 years from now, whatever it may be. There's always kind of an excuse as to why not to buy.
Yeah.
But I always tell people that like, at the end of the day, the banks are going to get their money. And let me explain that. So the investors and the people that are backing the loans are going to get their money. And I'll explain that. So like today's market, we would call it a seller's market, right? There's properties really expensive right now to sell or to buy rather.
Yeah.
So people who bought homes 10 years ago are sitting very pretty right now.
Oh, facts.
The properties went up almost 100%.
Oh, for sure.
You know what I mean? So right now, if you bought a property, 10 years ago for $200,000, you could probably sell it for $400,000 to $500,000 today. So it's a seller's market. People are making money on the sale, right?
Mm-hmm.
But what people don't understand is that when the property values spike like that, the interest rates tend to drop a bit.
Of course.
And so the mortgage you would actually pay is almost the same as if the property value was down, but the interest rate was high.
Oh, for sure.
And the reason for that is because the banks are always going to get their money.
Regardless, the bank's going to get their money.
You know what I mean? So
that's what they pay financial analysts for in the back end to do the math. That's what they pay them for, bro. So let's say, for example, yes, right now the interest rates are low, but you're still paying a lot of money for a house, right? Let's say the interest rates are high and the values are low. You're still paying a lot in interest. Right. And maybe loan programs change. That's another thing that people fail to understand. Loan programs can change from one day to another. If Fannie Mae, Freddie Mac, and Ginnie Mae decide that, well, we don't offer this anymore, well, they don't offer this anymore.
Right.
You feel me? Like they just don't. I know that there was a time where jumbo loans, they were for a moment, most lenders were not accepting loans unless you were coming in with more than 15%.
Right.
Usually jumbo loans, they'll accept 10%. There's some places that even will do 5%. It just depends on the type of lender you have. But for a while, they were not accepting them during COVID. Why? Because they were high risk loans. Okay. Right. Not high risk loan to the buyer, high risk loan to the lender. Right. So they said, well, we can't offer this. We don't have pricing for it. It's just, we're not offering it. So that's another thing that people have to understand. Like, again, buying when you can afford and when you can do it is key, because you don't know what programs are going to be like in 10 years. You don't know what programs are going to be like when house prices are low. What if when house prices are low, they expect you to do 20%? And guess what? You're shit out of luck because you don't have that 20% anymore. Right. So guess what? When you could buy, which was when house prices were higher, and you didn't because you said that you were going to wait until house prices were lower, and now that you're in a position where you could technically buy because house prices are lower, but then now you have to come in with more money, you're shit out of luck. It's 100%. Again, you got to buy when you can afford. You got to buy when you are ready. Yep. There's no perfect time. There really isn't. No perfect time. Yeah. Besides 5 years ago, there's no perfect time.
Exactly. So when I hear that, I often tell people like, you would be surprised, man. If you can get in and you can afford, get in. Yeah. Get in. Start somewhere.
Sure.
You know
start building equity, man. Yeah. Start building equity. I mean, we talked about it. Leverage, bro. You want to pull some money out and invest in some other kind of business. Here's another thing that people fail to realize, bro. We don't get taxed on money that we borrow against our house. It's a loan.
That's true.
It's a loan. Yeah. I'm not giving you tax advice here, people. I'm not a tax professional. I'm not telling you what to do. You do not get taxed on.
That's such a good point.
You don't, bro. Yeah. Right now, if you were to pull out $200,000 out of your house, guess what?
I pay $0 in taxes.
$0 in taxes. It's a loan. You have to pay it back, right? You got to pay it back. But the thing is, if you can afford the payment, or if we extend your loan to 30 years and your loan stays the same, or maybe goes up a couple $100, dude, you can afford the payment and you're getting that much money back. Yep. Where else can you get $200,000
like that?
Tax free?
Nowhere.
Exactly.
Yeah, people, man, it's just the game to be played, man. That's all it is. Yep. There's one other thing I wanted to touch on, kind of circle back a little bit about a time when there's a time not to buy, or maybe it's not the right time to buy, is if you don't have the intestinal fortitude to deal with the things that come along with being a homeowner. You know what I mean?
Oh shit.
So like give you an example. My rental, right? So I have a rental. Renters call me and say, "Hey, man, the pipes fucking busted somewhere.
We clogged the pipes.
Yeah, we clogged the pipes. Whatever. You go find out there's a busted pipe underground. Like then you gotta, break concrete and do all kinds of shit. And $10,000 later, you're dealing with that problem, right? Now, that's an older home. Yeah. It's gonna have those kind of issues. But you can't just call your landlord and be like, "Hey, this happened. I am the landlord now, right?
Exactly.
Or I am the homeowner now, and so now I got to deal with this, and I got to figure out how to solve this problem, right?"
Yeah.
So, if you don't have the intestinal fortitude, is what I'll call it, like the guts to deal with that kind of surprising shit, because it happens, man. Yeah. Pipes busted in walls, pipes busted underground. There may be electrical issues, there may be whatever, it may be new roof over your house. You know what I mean? Yeah. If you don't have the ability to solve those kind of issues or deal with them. Yeah. And they're all solvable, by the way. They're all solvable. Sure. And you may think it's going to break your bank and it's the end of the world, but no, I mean, they're all solvable if you just think about it a little bit and figure it out. I mean, I've been able to do it now for a few years, and it does suck. It is tough, but you don't have a get out of jail free card when it comes to something broken in your house. You got to go fix that shit. Hey, the sink's broken full. Hey, go figure out how to put it in the sink.
Go figure it out. Yeah.
You know what I mean?
Yeah, that's one thing that I will say is like you have to understand that buying a home and being a homeowner, it comes with a lot of responsibility. It's not just buying a house and nah, homie, like if you clog that toilet, guess who's getting up at midnight to stick your hand in there and figure it out? That's you. Exactly. Like if your house is leaking water, guess who's paying for it? That's you. Like you have to understand that being a homeowner comes with a shit ton of responsibility. As long as you're willing to really put in the work, as long as you're willing to understand that look, I have to get up and fix it. It's gonna cost me money. Like, okay, but buying a house isn't for everyone, bro. Yeah. I say that all the time. I even say that at when I meet with people, I even say that. Let's get to know each other to see if we fit each other's needs, and see if I can help you, and see if my services are good for you. Because if they're not, I'm going to tell you straight up, look, you don't belong here. Yeah. Go look for a different loan officer because it's not going to work out. I'm straight up like that, brother. Same thing with homeowners, like there are people wanting to buy a house. After I have a conversation with them, I tell them like, look, you have to understand that there's responsibilities that come with it. If you got a fucking leaking pipe and you got to break fucking concrete, it's coming out of your pocket, not mine. Yeah. You can't call me because I'm gonna fucking click on you. If you call me at 2 a.m., I'm gonna fucking look at my phone and be like, what the fuck are you doing? Right? I'm not gonna do that. Like, no, like that's your responsibility. Like being a homeowner comes with a lot of responsibility, and that's also another thing that a lot of people have to understand. Like that's you now.
So there is kind of one workaround from that, right? Like condo owners, right?
Yes and no, bro.
If you have a condo and you have
HOA,
an HOA association, known as associations or HOAs, is basically you pay a company that kind of handles the stuff of fixing the grasses and whatever else. Like, if a pipe breaks in the wall of a condo, are you responsible for that, or is the HOA responsible?
9 out of 10 times no. Oh, yes, you're responsible.
Oh, really? I didn't know that.
Because most condo associations or any association in general are walls out. Anything from the wall out. Anything from the wall in is you. That's why there's a lot of people that have condo insurance, quote unquote, but they don't understand that if the house burns down, they'll build your house again. They're not going to cover what's inside.
Yeah.
If you have a laptop in here, you're fucked.
Yeah.
That's why you want to get homeowners insurance. Right. Yeah. So you have to understand that condos, you have to find out what the insurance covers. Right. Ask the questions, and if not, just get the extra coverage. It's not that it's $30 a month.
Yeah, but homeowner, you have to have. That's one thing to talk about too.
Right.
You have to have homeowners insurance.
Oh, for sure, facts. Right?
Yeah. So, but here's one thing that I didn't know.
But just to cover the structure.
Just to cover the structure, it's just the structures. That's walls, structures, supporting walls, that kind of stuff.
Yeah.
But it doesn't cover earthquakes.
Some of them,
unless you pay for it.
Correct.
Most homeowners insurance in California, in an earthquake-ridden fucking state, don't cover earthquake insurance. Right. So, like, if your dwelling or building gets shaken down to its its roots,
you're
kind of screwed there. So that's something for people to know too. I didn't know that.
Yeah.
So make sure.
That's why there's so many things that we can go on about, Javi. Like, so many things about owning a home and things that I would recommend people to do. But I mean, for example, homeowners insurance, you always want to check in on that, see what you're covered for. Like, do it once a year. Like, bro, you take your car in to get checked once a year, right?
Yep.
I hope you do. I hope you get at least an oil change once a year. But we're doing these things, proactively to check in on our cars and all these other things. Like, you have to understand that you also want to check in on your home. Like, make sure, check in on your homeowner's insurance. Call your agent and say, hey, what are the products you have available? Call your loan officer too. Tell them, like, hey, is there anything that I can benefit from? How are rates doing? Like, things like that.
Right.
Like, there's so many things that come in. You have to take into consideration when becoming a homeowner. Like, it's a lot more responsibility, but if you do your due diligence again, and you take care of things up front, and you treat your home like you treat your car. Right. I hope that you're at least getting an oil change once a year, minimum.
I check oils at least a few times a week, but
I'm talking about the car, bro.
I had to throw a joke in there.
There you go. You want to make sure that you stay on top of these things, bro. It's important. It's a huge investment. So
for sure, man.
Yeah.
Is there anything else you think of or you can think of that we should kind of throw out there for people? Or if not, maybe we can do another podcast in the future.
I mean, if people have questions, I think mainly what it is if you guys have questions, reach out to Javi, reach out to myself. We could do this again, man. We could definitely do this again. I think for this kind of topic, it's just one of those things where it's kind of what the people ask, bro, because it's a lot of information. Right. For those of you that are down to this point of the podcast, I congratulate you because it's a lot of information to digest.
Yeah.
And we just cover so many different things when it comes to, being a homeowner, how the process of buying a house goes, all that good stuff. There's so many things that come to it. But believe me, I can say it from personal experience. Owning a home is something beautiful. If you want to paint the house, paint the inside of your house fucking pink today, you can paint it pink. You want to paint it green, you can paint it green. You want to put Venetian plaster all over your house, you can put Venetian plaster.
That's my house, yo.
You want to put crown molding everywhere, bro, put crown molding. You want to put badass fans everywhere, put badass fans. But the beautiful thing about owning a home is that it's yours.
It's yours.
Yeah.
And I can tell you this, man. There was no prouder moment in my life other than becoming a father and catching my kid out of the womb.
Yeah.
And walking through my house the first or second night with a beer in my hand, in my underwear, going, "This is my house."
Yeah, the best feeling ever.
The best fucking feeling ever. You know what I mean?
Nobody can tell you what to do in there, baby. That's you.
It's the best fucking feeling ever. And I really hope this podcast. I know it's a boring topic for some people.
Yeah.
But I feel like a lot of people will resonate with it and at least learn a little bit, stuff. Hopefully, and maybe this is readily available information. But in my experience, when I talk to people about it, like, oh, I didn't know that. Well, I didn't know that. I didn't know that. And I'm like, damn, there's so many people out there who can totally take use of this information and know that they can do it too. For sure. And my biggest thing that I want people to know is like, it's not as hard as you think it is.
Oh, it's not. And I hope I'm not scaring you guys with telling you all this information about it. Yeah. At the end of the day, you guys really only get to see about 10% of everything I just talked about.
Yeah, exactly. If that, because that's what you get paid to do.
That's what I get paid to do, baby. Take care of this for you.
Good shit, man. Hey, well, I'm really stoked that we did this.
Same here, bro.
It's been about a month since I recorded, so it's been a while. So it's crazy to be back on the mic. But thanks so much for coming on, man. I really appreciate it.
Yeah, appreciate you inviting me, bro. I know we talked about this for a minute, so
yeah, and we'll do some more, man. And maybe we'll do one about investing in like in digital currencies and shit like that too.
My brother will do it. Yeah,
we get your boy. I know you got a guy you work with when it comes to investing and stuff.
Yeah, like my boy Brandon. Yeah, from Stock Strategies. That guy's a beast, bro.
Yeah.
Last week I think he pulled in like 10 grand, bro. He's insane.
So I should talk to him and get under his wing, and then
for sure, bro.
Get him on the podcast.
Yeah, for sure.
Because I would love to spread some kind of.
He does more. He does stock options. So he does calls and puts and. Anyway, you got to talk to him, bro. He knows really what.
That's what I'm saying. But maybe what I'll do is I'll get under him and kind of figure out what he does.
Oh, for sure, bro.
And then get him on here to talk about some of that stuff too, because it's important, man. You know.
Yeah, and this cat's young, bro. I think he's like 24 or 25.
Oh, really?
Oh, but he's gamed up, bro.
I would love to meet him. So.
He's in the military. He works for I think he works for Space Force or something like that, like something having to do with space. Yeah. He's doing really good for himself, bro. Yeah, really proud of that dude, man. Hell yeah.
Maybe I'll learn something from. Well, of course I can, because.
There you go. We can learn from everybody, bro.
Yeah, of course, brother. Hey, thanks everybody for listening. We'll be having another podcast in the future, man. Thanks, brother, for coming.
Oh yeah, thank you, my bro.
Appreciate it, man.
See you guys. Peace
out.